Hello traders, this is Ken Calhoun, president of the original Day Trading University and Trade Mastery, with another professional trading success strategies episode here for you. I wanted to give you some updated strategies here at the end of January 2016 and what I call small cups, big profits, and looking at some cut pattern breakout strategies for both intraday and swing trading that can hopefully help you make a difference in your trades. As always, all information is for educational use only. I'm not making advice about to buy, sell, or hold, and by watching this, you're not to make actual trades. But first, before we jump into the charts, just a quick public service announcement for traders. I like to mention this now and again because I know there's a lot of people for you to choose from when it comes to who to learn how to trade from. I would suggest that you might want to consider people who actually prove they trade like I do. Makes a big difference compared to all of my many of my competitors, most of whom don't prove they trade. The trading vendors really don't want me to tell you this, but be a critical thinker, be a skeptic. So choose who to learn from carefully in the trading industry. 3 simple tests. Okay, test number 1. Can they prove that they're even a real trader with brokerage P&L screen caps? Anybody can talk about charts, but who can actually make money with their charts? Those of us who have made winning trades, as well as stops, but have made some winning trades too, you should be able to learn from me. And you can take a look at examples of hundreds of actual real money trades. Most of them are in my Interactive Brokers account, but also some are in my Fidelity account, especially lately. You can see at my earlier forum at tradingtalk.com. Tradingtalk.com. We have over 80,000 views so far in that forum thread, and I think you'll get a lot out of looking at actual real money winning trades and stops that I took. Right? Who else in the industry does that? Nobody. Nobody posts hundreds of real trades. Why not? You should ask yourself. It's an important question. Here's an example of recent real ones. Lately in the UVXY and BXX inverse ETNs on the market drop, doing well with those. The second thing to look for is, do they have video testimonials from their satisfied traders? Now, I've got so many hundreds of traders that have seen me live in my money show appearances and in my live Las Vegas and Colorado and California and New York appearances and Texas appearances in my live seminars. Make sure that they have video testimonials, because anybody can make up text, right? And many people do, but video doesn't lie, right? Having video of people telling you how much they appreciate what they learned from the educator you're considering working with makes a big strategic difference in terms of who to choose, who to learn from. And the best of the best, we have plenty of video testimonials from lots of traders around the world who are happy to tell you how much our training made a difference. Okay. And a final check is kind of the credentials. I'm a UCLA grad and multiple Fortune 500 consulting clients, and used to be a quality engineer and statistician. And currently, the last 16 years, I've been a top expert in the trading industry. And you may have seen me at Money Show. I'm a current contributor to Stocks and Commodities magazine. I used to publish an Active Trader. I'm in equities.com and many other places. And check the domain Whois registry to see how many years the people you're choosing from have been in business. That makes a difference too. But most importantly, can they prove they trade and do that video testimonials? So here's kind of a quick step-by-step flowchart. We'll get to today's lesson in just a second, but just a reminder, go ahead and attend everybody's free Pitch Fest webinars you may see out there and see what they taught. But the main thing is, did they show how they made winning trades with actual real money profit and loss statements of real money trades that they actually made to demonstrate the validity of the talking on the charts that they did, or are they just chart talkers? So if all they did was talk about squiggly lines on charts, you might not want to take them too seriously, right? You have to ask 2 critical things. Do they prove they really trade and can demonstrate that with P&Ls of real money trades? If they can't prove that they really trade, which is the situation for at least 95% of the educators out there, because mostly they're failed traders who are con men, then you might want to avoid wasting money on their training. And second check is how many video testimonials from satisfied, thrilled traders that they've actually worked with in person can they demonstrate that they have. I have dozens on my websites. You can go to trademastery.com or daytradinguniversity.com and see dozens of real trader video testimonials. If they don't have any of that, then you should avoid learning from them. And if you have a lot of both of those proof elements, then you may want to start to trust them. So people like myself are hard to find because there's very few people that are actual real traders. So beware And especially true of the well-known, in law enforcement, we'd call that a long con, or these guys who are out there, they're chart talkers, they establish these little businesses, they do webinars with their joint venture buddies, and they act like, you too can be a winning trader if you buy my magic indicator, or look at how this chart did. I bought here and I sold way up here. Really, trust me. I didn't get the whole trade, I just got the middle. Derp, derp. Nope. Say, prove it, buddy. Let me see your P&L of actual real money trades you made. Okay, like, I'm keen on showing at every opportunity, this is for my Fidelity account. So anyway, make sure that, and that's just one example of a couple recent trades I've made. Anyway, make sure that there are some proof elements. Be a little more skeptical, right? You would not go to a doctor who doesn't have a medical school degree, right? And doesn't have at least, I only go to doctors who are middle-aged because I don't like people who are right out of school, and I don't like people who should be retired and are still in practice. I like kind of in the middle, guys in their 40s and 50s and whatnot are top-notch practitioners, been doing it 15, 20 years, right? Similarly, in the trading industry, you should make sure that not only do they have industry credentials and you've heard of them, but by the way, also they prove they trade. For fun, I even hired 2 models to tell you if they can't prove they trade, it's just a charade. Over 5,000 views. That's more than a lot of my trading videos, so I guess you guys like watching beautiful women. Who can blame you? Anyway, youtube.com/realtradingproof, and there's a couple of videos on that YouTube channel telling you why you might want to consider making sure that people prove they trade. So final thought before we do our lesson today. Remember, any talking head, con man, BS educator can merely talk about charts and indicators, and most do. What matters to you is, can they prove that what they're talking about has actually made real money? Can they make money in real trades? Are they actual traders? Or are they just guys who, like talking heads on cable TV, they go blah, 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 buy here, sell there, but they can't make money, so they are talking heads instead of traders. So anyway, make sure that you have those 3 proof elements. For those of you new working with me, you may have seen me in CBS Market Watch, Money Show, TheStreet.com, Stocks and Commodities Magazine, all over the place. I'm here in Colorado in the US of A, and it's great to see so many people finding value in my training. You may have seen me in this month's January issue of Stocks and Commodities on high volume breakouts. Almost 15 years ago now, I was featured in CBS Market Watch with proof that I was. Just because somebody, by the way, has a logo of some place on their website saying "as seen in" doesn't mean they were actually seen there. There's a lot of people who make that up too. Make sure that there's proof that they actually were seen in places they claim to have been seen in, and so forth, right? When in doubt, stay away from most of the trading education industry. Most of it is thinly disguised con men that do not actually make real trades, right? Those of us who are real traders and are industry experts like myself are good to learn from. Or I would suggest to you that you put a couple of critical thinking cap on decision points before you start working with people. So anyway, in this episode, let's take a look at cut pattern breakouts and how they work in our current markets. Here's, I'm recording this on January 29th, 2016. And what I want you to look at the difference is small versus large cups. And a cup pattern is simply, looks like the letter U or the letter V. Large cups aren't quite as good as small cups because a large cup has a lot of selling pressure to overcome before buyers will come back in. So often you'll see either an embedded cup or a small handle, is also known as a small, here's a cup and handle breakout. What I want you to look for are these small, less than a point or so depth of cups for breakout continuation plays. And here's a swing trading 15-day, 15-minute chart, the ticker O. You'll also often find that previous cup pattern resistance provides new support. So you really need to master, even back here, it told you the early warning sign of where the previous resistance is now new support and it takes off. Make sure you master cut pattern breakouts as a core or integral part of what you do as an active trader. Now, the challenge is you often get false breakouts. So here's an example of a winning cut breakout, bullish cut pattern. Schwang took out new highs, ran up from 22 up to 28, so nearly a 6-point run on a $20 stock. So that's good in Range Resources. But not so good if you had waited till over here to buy, right? And you could see that This is a false breakout, a bearish upper shadow, and a pulled back down into the previous trading range. So there are things that I teach you in my different courses for how to avoid false breakouts, like using a specific filter above the high to avoid or to stay out of a false breakout and get in on those that are successful or likely as to be successful. Okay. For example, here you can see not just one, but two large green candles at the right side of the bullish cup. Here, you had a large green candle, but the next candle was red, so we got a chop and drop instead of a breakout continuation. So if you want to make money in your trades, potentially, you really need to know the difference between winning cup breakouts and choppy charts. And I go over that in my different courses in my live trading room and swing scans, alerts, webinars, and the rest of it. Here's another good example of a bullish cup. Just practice this. Look for these kind of bullish cup patterns. There's a bullish cup one. Even if you miss that one, you still got a second shot at it, right? Here's another bullish cup right there. You buy above the high and you're off to the races and in good shape. We have yet another bullish cup here. So we'll see if this thing, this is Barrick, a gold miner, ABX. We'll see if that bullish cup takes out new highs over 10 next stop, right? So often what you'll find as a trader is you miss the first cup or two or three. Some cups going on back here, but once it starts to poke its head above resistance, then it becomes interesting to us as professional swing or intraday traders. And one of the things you want to look at if you're a longer term trader is make sure, and here's a good professional trading tip, is make sure that the cup breakouts occur plus or in addition to a movement over a nearest either 50, 100 or 200 simple moving average line. So here, a good example of why is, look back here. Here's a bullish cup, and newer traders, the less informed traders, the losing traders might have bought it right here in this first breakout. I didn't buy it here because I saw that we had a gap here, an exhaustion gap between the current cup pattern breakout and the 50 moving average. So I didn't take the trade there. Okay. You could see here, though, it was a good breakout, a good winning breakout, because it broke out above this moving average line plus a cup. So you have two different technical confirmations in convergence with each other that are supporting the trade. Whenever you have multiple technical signals, like volume also, right? We had a minor gap continuation right here on high volume, or high volume on the right side of the cup, I should say, that then had a minor gap continuation plus a recovery over that moving average. That made for a good breakout that did hold and run up a couple of points so far. Okay. Now let's switch so look for moving averages, breakouts plus cups on the longer term chart. On the shorter term chart, make sure that you learn the difference between cups that run and cups that stall, and you can do that with my different courses and so forth. Now let's take a look at intraday charts. The two that I wanted to mention, first one was the E-minis. And I teach how to use micro cup patterns with the ES in my eminiuniversity.com. Or actually, that just kind of links to the course page at eminiinferno.com. Eminiinferno.com. Eminiinferno, DVD system I did a few years ago. Anyway, still good patterns. Inverse head and shoulders / bullish cup pattern. Look for these micro cups, right? And here we have a bearish head and shoulders reversal, and there's another micro cup pattern. So if you trade the minis for day trading, make sure that you are adept at or capable of identifying the difference between breakout cups and reversal patterns, so that you're correctly in trend on the breakout, either for a long, or if you start to see a short cup start to form, you go short under the low of a bear cup reversal. Okay. And with equities, let's wrap up with a quick opening range breakout example here in PayPal yesterday. I'm recording this the morning of the 29th, right before the opening bell. I got to get to the markets here in a few minutes. But anyway, you got a bullish cup here. That's a bull cup that then broke out sharply and ran up, all the way from 33.80 up to just under 34.80. So almost a 1 point open range run up in this bullish cup. So as a day trader, always look for the letter V or a triangle or the letter U, whatever you want to think about it. That's buyers coming back in. Give preference to these if they have high volume on the right side. Okay. Whenever you're swing trading, make sure that you're looking for gap continuations. Like PayPal looks good for a swing trade as well because of gap continuation. And intelligently, you want to be able to focus on your energy and your attention on these smaller cups. The big cup's kind of more suspect because it's got all the sell pressure to overcome. So everyone's kind of skeptically, nervously buying this right side of the cup. So I don't like buying those. If I see a hammer and I buy a pivot, great. But barring that, I like to focus my own attention, at least when I'm doing my own trades, is on these minor cups on high volume that continue on up and produce a good winning swing trade for me. So those are the type of things to look for. Thanks so much for being here. This is Ken Calhoun, president of the original TradeMastery.com and the original university, DayTradingUniversity.com and SwingTradingUniversity.com and eMiniUniversity.com. The force is strong with this one. I sense a pattern, a trend. Look for patterns with your cup breakouts and make bigger winning trades more often. And remember to only learn from those of us who prove we trade. Kind of sort of makes a difference, right? I have no idea why on earth would you trust some stranger on the internet who just talks about a chart and claims to have traded it without any backup P&L proof of a real money trade screen cap or 100 or 2 like I show in my trading talk forum to show that they actually are the real deal, right? So many people that copy me learn from the thing that separates out the gems from all the wannabes are those of us who are real traders to have ample proof of P&Ls, right? So make sure you look for that. It really counts. Anyway, make better winning trades more successfully, and I'll see y'all in our next episode. Bye-bye.